Hey folks, Shawn over at the Annuity Expert. In today's video, we're going over the Annuity Benefit Base. The Annuity Benefit Base is this separate value that usually is fictitious, meaning it's not tangible. You can't pocket all of it and walk away with it or pass it down to beneficiaries. It's a phantom number that's used, that the insurance companies use to calculate your future lifetime income amount. Okay. So what I mean by that is, let's say you want to buy an annuity and you're looking for the lifetime income. You're not looking to retire for another 5 years. Well, the insurance company has to have some sort of formula, some sort of calculation to know what your lifetime income is going to be starting in year 6, right? So how did they get from A to Z? This is what that benefit base is, okay? Want to put a little caveat there. There are a very few annuities out there where the benefit base is tangible, typically as a death benefit, meaning when you die, it may be available for your beneficiaries to inherit over a period of time. Allianz 222, Athene Agility are examples of that, okay? But usually the annuity benefit base is usually a fictitious bonus, or it's a very high guaranteed growth rate, usually higher than what you typically can earn in interest on an annuity. For example, you may get a benefit base. The Athene Agility will say, hey, we'll give you a 50% income-based bonus plus interest growing at 200% participation rate. Well, that 50% bonus isn't something you can walk away with. It's used to calculate your future income, usually starting in year 11. You may see stuff from like Jackson, hey, I'm going to get 7% a year guaranteed up to 20 years. Well, 7% isn't a real growth rate. It's a calculation. Hey, this is how much growth we're going to give you each and every year towards your lifetime income, and here's going to be your payout rate in this given year, right? The sad thing is, your financial advisor will typically pitch it in a way that it seems like it's a real growth rate. We get it all the time. Hey, well, I like this Athene product because it's going to give me 10% a year. Well, no, it's not going to give you 10% a year. That's a fictitious number to a lifetime income amount, right? You don't get to walk away with that. And so, or you don't get to pass it down to beneficiaries. It's used to a lifetime income. So you're going to hear things. If you listen to talk radio and there's a commercial about a bonus, that's what usually this bonus is, okay? You're gonna hear things on radio talk shows. Just don't buy it. You know, like if it sounds too good to be true, it usually is too good to be true. Okay. And for those of you that do listen to talk radio, you need to know that talk radio shows is paid advertising. It's one long ass commercial. And so when you're listening to these things, you're like, oh man, annuities are great. I'm going to get 50% bonus on day one, and my money's going to grow, and it's going to change my life. It's not. It's a benefit base. Some terms to know. There are insurance companies have their own fancy jargon for a benefit base. Some of them are called income bases, benefit base, income benefit base, protected income value, protected income base, lifetime income base, guaranteed income base, the guaranteed withdrawal benefit base. I mean, there's all these different, it's all the same thing. So just know that, hey, this benefit base is a fictitious value used to calculate your future retirement income. It is not interest that you earn on your money. It is not real money. It is money that is geared towards for you taking an income. Some things you need to know about an income base. The income base usually stops when you start your income. So if you start your income in year 2, there's no more income benefit base. There's no guaranteed growth. The longer you defer before taking your lifetime income, the more the benefit base can work for you and give you a higher payout in the future. So that's the name of the game with annuities and lifetime income. It's not age. It's the time between your purchase date and the time you start the income. The longer you wait after your purchase date to start that income, the higher your income will be. What else should you know? Don't fall for gimmicks. There's a lot of them out there. A lot of them. Just don't fall for it. Focus on what your lifetime income amount is going to be. So what your bottom line is, what you're going to collect in a monthly payment. Focus on that, and then you can work your way backwards. Okay. Don't buy some sort of an annuity with a benefit base because it is tangible as a death benefit. I'll give you an example. You look at the Allianz 222 and the Athene Agility 10, two of the worst annuity products out there for future lifetime income because it's performance-based. So yeah, you get a guaranteed income benefit-based bonus, but then you have to start growing on top of that. And the product, you don't want to rely on the insurance company to give you your future lifetime income. You're more likely to end up in disappointment than happiness because you're putting your outcome in the hands of the insurance companies and not your own hands, right? If you're using them, but at the same time, the Athene Agility and the Athene Allianz 222, they're great as life insurance alternatives or a life insurance alternative for your qualified retirement accounts because they can be tangible at death for your beneficiaries. There's a lot of circumstances where you can withdraw your RMDs at age 73 and still preserve the original investment amount as a death benefit, right? Those products are excellent for those, but they are complete garbage for future lifetime income, okay? So just the best thing you could do is use an annuity broker. Using a financial advisor, you're likely to end up with a shitty product. You work with a bank or credit union, even a shittier product. Using a captive agent, the shittiest of shittiest products, right? You're going to want to use an independent annuity broker because their livelihoods are based on the sale of annuities, knowing the contracts inside and out, and they're going to be able to have the largest selection of annuities out there. Going to plug myself here, the Annuity Expert. We have the largest selection of annuity products in the United States, and we're going to have more expertise in those contracts and be able to give you a higher income or a better bonus or more upside with a better rated company or more liquidity or just different strategies used with the annuities compared to other financial professionals. And that's not a knock on financial professionals. It's just, it's reality. They usually get a laundry list of products they can sell, or they create a cookie cutter process for their clients, and they'll just stick you in whatever product that they think is great at the time. And a lot of times they think it's great, but in hindsight, they're garbage products. I've created videos talking about this. Visit us at the Annuity Expert. Focus more on your bottom line. How much income are you going to generate on a monthly basis? And then work your way backwards and you'll be fine, okay? So that's what an Annuity Benefit Base is. Got any questions, leave a comment below and we'll catch you on the next video.